All right, family, what's the vibes? How you guys doing? It's another video, and this is gonna be, kind of like our end of the week review. So it's becoming, a thing now. All right. And I've been doing this for a while actually. All right, where I just give free game on the market outlook, a midweek review, and a weekend video. I really like the weekend video so much because for me, the weekends while I was developing, I'm still developing, right? Were those times where I had to put in extra work because I knew, not so many people would be doing that, right? And the work accumulates, right? Watching that extra video, watching that, reading those few pages on the weekend, right, will get you ahead of somebody that just, leaves the weekend to just go and just kind of like restart some Monday. So I like videos like this a lot, right? Some of the things we're going to talk about today would be, exactly the things that played out in the week, right? What happened with gold, what happened with the dollar, interesting things I want to teach today in terms of fundamentals, right? And what happened with G. So majorly in this forum, right, we have been touching on gold, DXY, and GU, and just staying around those corners. And the other things are just, extras, right? We just have to focus on that because of time and, other things, right? But before we get into that, one of the things that this morning I woke up very excited because I saw a message from one of um the guys in the Discord. Is been a family, he's been in the inner circle last year also, right? And it was just expressing his feelings on how his trading has become better. And I think we can actually just look at that together. And honestly, this is exactly what gets me excited. Nothing again, fulfills me as much as this. Right. And this was the message. I want to say a very big thanks to Mr. May Yinka. I have gleaned a lot of insights from him, learned a lot of insights from him just by listening and watching, analyzing the things that he has done and the screenshots he drops here, the motivation he also gives, and then seeing people kill it here, it keeps my spirit that I can do it. And cause I could have given up a long time ago. Being in here has really improved my trading dramatically. Honestly, like this just, warms my heart. Right. And it's not just that, just go through the channel. If you're not on this channel, I'll drop a link in the description. Just go through this channel and you would see results day in, day out, day in, day out, day in, day out. Like analysis coming in and results following, and it just interests me. I could go on and on. Now it's not even something I can just say, oh, let me just show you this part, because it's every single day. And this is exactly what I planned for, the first quarter of the year, and we've had that, right? And that's interesting. That's interesting. Why I say first quarter, because it's not like it's stopping. It's only going to be moving to a different channel. It's only going to be moving into the inner circle. So the inner circle was on a pause. So I can really show that value can actually be transferred and trading can actually get you profitable if you commit to it, if you actually do the things that are said to be done, that the systems that I have used and I have proven, if you can actually lock in, you can actually see results. And we've had people pass funded accounts, we've had people move their accounts thousands and thousands of dollars. We had a call where, somebody on the channel was talking about how he's made almost $4,000 in this year alone. And that just warms my heart after losing $7,000 last year. So if you think about it, it's like you can actually get results if you actually double down to do what's right. The problem with the industry is the right things are not out there. Now, sometimes the right things are out there, right, in terms of technical analysis, but that's not all that actually leads a profitable trader. There is, how do I actually manage the money? How do I keep it? What are the rules? What are the drills? And these are the things, in the inner circle that we're going to double down on. We did so many types of programs in the last 3 months, a backtesting drill, calls, live sessions where we actually spoke on certain things that actually affect the trader's mind, or how the trader is supposed to think in conditions. Where should I risk more? Where should I leverage? Where should I deleverage? All those things were being spoken in bits. And it's again to show you that there is more than, just looking at candles and saying where to buy, where to sell. It's a shallow way of thinking about the largest financial markets. And I'm stressing this because if you are in development stage, if you are in that stage where you've been struggling and you've not made money and you've been on this for a while, you've been studying good information, then you don't want to miss the inner circle. It's an investment that will change your life. I can say that very boldly because I've had a handful of students. I had multiple students come out of the inner circle and are just doing well up until today, right? And that's why I said if you are building, because the inner circle is not for newbies, we would not be going back to talk about what is Forex. If you're just starting, then maybe you need to tilt to the one-on-one and we need to get things sorted. But you need to be building. And that's why the price range is not expensive at all. It's cut down. This information clearly would worth $500, $1,000 a month, right? But it is priced down to $50 a month because I want to grow a family. I want people that would sit, and not because of their paying. That's why they're in the channel. They actually want to grow and scale together, right? It's going to be a community that encourages you. One of the things that guy said there was that seeing results on the channel makes him know that it's possible to do it. If you're a trader and you hang around with people that are not trading and you tell them about your losses, you see how they look at you, you see how they reply they immediately want to tell you how you need to stop and do this other thing. And it's because they don't understand what you are doing. But imagine that every single day you're in a community of people that actually do the same things that you do, that show you results of the same things that you do. There's no how you want to be lacking behind. There's a study in science that says the 5 people that you move around with, the things that you see them do, right? You automatically start acting and doing those things. You become like the 5 people around you, basically. So it's just a community thing. It's epigenetics. Like your environment influences you. So what environment are you? Right. So April 1st, the inner circle is going to be live. It is 75,000 naira. It is $60 if you're going to be getting in monthly, right? And we're going to write that out. We're going to have a launch call. I'll drop the details before April 1st. And on that launch call, there's going to be, a slash in even these prices that I've said to you, just so that you can get in. I would like you to think about it as a 3 month stretch thing. I'm going to get in for 3 months and I'm going to see what it does, right? And I can boldly tell you, if after 3 months you don't see any change, then quit the payment, stop the card, and go somewhere else. But if you actually commit to the information, you'd start to see massive, massive changes in 3 months. All right, I've spent a whole lot of time, preaching and selling you the inner circle, but it's because it's worth it, it's valuable, and that's why. All right, but I'm gonna move into price. I want to show you something very interesting, and I think I'm going to spend a little bit of time on there, right? It is the DXY, right? So we've been looking at the DXY, and from the analysis I talked about on Monday, the market outlook. I told you how I wanted to see continuation of buy side for the DXY. But there's something that is very core about any market. In premiums, you don't want to be buying. It's so important, and I've used so many analogies to explain this. In premiums, that's the worst place to buy. Price has been expanding or expanded to the end of the week, and then the next day you want to come and buy. No, that's not what you want to do. In premiums, you don't want to be buying. So when we came on Monday and we talked about this, I said, yes, we still want to see price return back all the way up here, right? But we want to see a little bit of retracement. Just think about it. Every time price expanded, you saw a retracement or reversal. or a revert or a retracement in this case, right? Retracement back here, expands all the way, takes out this high. What happens here? You don't want to come in and buy. Price retraces back, then continues, takes out this high here. You don't want to buy, retraces and continues. The same thing if you're expecting buy side. You don't just want to jump in. Why? The majority of traders would jump in here and just buy because the market is going higher. It's kind of like how we are primed as primates, that we see the road, we follow it. Oh, it's right, then right I go. But the market is saying it's up, down you want to go. It's down, up you want to go. That's what it means by selling in premium, buying in discount. So we identified the new range, this low to this high. To understand what the range is, you want to understand what a break in market structure is. And very simple, it is consecutive candles moving in one direction and then closing above an old high. So consecutive candles that close above an old high, that low to that high, it is an institutionally sponsored range, and this is your true range. So when I'm looking for where to engage price, I think about where is the last range formed? Are we at the premium or discount? If we're in the premium, I can think of sells. If we're at the discount, I can think of buys. So Monday, Tuesday, we ran lower. We weren't really doing much because there wasn't anything to back up. But I want to really focus on Wednesday. So Wednesday, I want us to start to think about price as not just technically, and it's something that I've been talking about recently. We do not just think about price technically, we also think about price, or we think about price with fundamental analysis. Also, we want to understand what are the drivers, especially in this period, right? Even in any period, right? I'm teaching you how to read the data, and would actually look at a little bit of things today, right? On Wednesday we had what's called PPI coming. PPI is telling you how many people, or is telling you what prices people are paying in the economy, US, that actually relates to inflation. Are we having hot inflation or cool inflation? The PPI release is like your CPI release also, right? And it's telling you, are we having hot inflation or cool inflation? Hot inflation means higher than expected numbers. Higher than expected numbers, we have hot inflation. Hot inflation means the Feds are less likely to cut rates. It means the dollar would remain bullish, because if the Feds are not likely to cut rates stays higher or it increases. That means your yield, the US yield is increasing. If US yield is increasing, investors will want to let their money remain and keep their money in. So the dollar will go higher. Right. So Wednesday, we had PPI coming in, and I've said it so many times, you don't need to trade this release. In our time in Nigeria here, it is 1:30 p.m., right? And if we go back to price and look at what price was doing right at 1:30, you would see that there's still a way for you to get into the opportunity of buying on Wednesday, which is one of the profitable days that we had. On this particular day, I was actually buying oil instead of the dollar. But you look at this, right? We saw price on Monday and Tuesday rally lower. You would see that all of this follows the understanding that you already have, right? If price is going to be bullish on a particular week, how does it start out? Bearish, open, low, high, close. So Monday, Tuesday runs lower. Wednesday morning, we go out to take out Tuesday's low. We take out Tuesday's low and a break in market structure ensues. This is a break in market structure. Consecutive candles closing above an old high. Look at the directional bias before this. It has been lower highs, lower lows, lower highs. But here we close above an old high. If price is bullish, we're going to see old lows being protected, old highs get taken out. We see this happen. And even if you don't trust this, you wait. Price returns back into discount, forms a higher low, low, high, higher low, higher high, boom. Bullish market structure, returns back in here, right? And this is a trade. Now you'd see this is 11:15. The news release came in at 8:30 here, breaking market structure again. So you could have still engaged this mitigation block in here as a play. Right, you could have still engaged this mitigation block in here as an entry or buy that fair value gap, and that would be good for that particular day for buy side. Now you have mixed the idea of the release with what you want to see on the day. We already saw price return back into discount, and then we saw price rally. Now this was very, very, very sketchy, because It was not very sketchy, but we talked about it. I wanted price to return back into that fair value gap and at least the opening of that OB, right? Because that's what links the fair value gap. But on Wednesday, we do not do that. But remember that the key levels are not just order blocks or fair value gaps. They are also old lows and old highs, especially on the higher time frame. So the confirmation of that Wednesday's trade was we already took out Tuesday's low. And this is what I like to pinpoint in my trading and how I like to see these things, right? It can take out the old low and still run into the fair value gap. It can take out the old low, run into the fair value gap, move past the fair value gap, and then go to the OB before it buys. So the question becomes, how do I know when after the old low it's time for it to move? How do I know that it's still going to return back into the open or going to go back into a deeper PDRA? It's simple. Every time I think a low has formed, I wait for a breaking market structure. So if I think the key level here has been taking Tuesday's low, what makes me trade bullish bias on the day as a day trader is that I wait for a breaking market structure to first happen, which is what we just saw, to first confirm that price is bullish, and then I engage price. Now, if we fail to break market structure, it means that price is still seeking deeper PDRAs. It means that price is still seeking deeper discounts. Because it's what I see. It plagued me also as a trader, where I would get into price, right, at what I think is a discount level, and what I would see is price would go much more deeper, probably take me out, and then still in the range, expand higher. And that was Wednesday, right? On Wednesday, we saw, again, the pairs that we want to see. We saw, well, I'm looking with GU. We'll talk about gold separately. We saw GU return back into that fair value gap here, right? On Wednesday, taking out Tuesday's high, fair value gap, OB, midpoint of the OB, right? I don't think we got to the midpoint of the OB precisely. And we saw those sales coming again for GU, right? If DXY is going to be bullish, GU is going to be bearish. Now, Thursday, which is the day that I really, really want to show you something about. I took a loss on Thursday, GU. I took a loss on Thursday, GU, and it was because I wasn't aware, I wasn't available. One of the things that makes you a better trader is the ability to first be aware of the information being printed. And that's why you don't want to drive while you trade. You don't want to, have things bugging you outside your trading life and then now want to use trading to compensate it. You just mess it up. You mess it up there. Because the idea of trading is the idea to be able to read information and see how those information would interact and allow you, make better decisions. So if your mind is already clouded, trading is not a game where you use it to ease your mind. Don't trade like that. You lose money when you actually do not have focus, especially when you want to trade. So what was happening on Thursday? We need to go back to the data. Now, we already saw Wednesday form the low, and typically, the idea is Wednesday should form the low of the week and we're going higher. That's exactly how I thought. But I've said also, if you're a trader, you need to every single day come back into price, come back into the information and reassess what is happening. You cannot just say, oh, because Wednesday was bullish, it's now typically Wednesday low of the week. It can't be Wednesday low of the week if there's a continuation coming in on Thursday. But how do you really know? You need to check. You need to every single day do a review to understand, oh, since Wednesday has been bullish, what would make Thursday be a continuation? What could likely make Thursday a bearish day? Those are the things to think about, right? And this brings us down to, as we can see, Thursday was bearish, which was quite surprising if you don't know exactly what was happening, with the news release. On Thursday, we had a whole lot of news release. This already should put you on edge the day before that. Oh, I need to really be careful about this, right? If we look at Thursday, we had, let's go into the numbers that we want to really focus on. GBP, we had climate count change, right? And this actually talks about the amount of people that claim employment in the UK, right? Pound, right? In the UK. And we saw that we had numbers lower than expected for climate count change. This is bullish for pound. This is bullish for pound. So early in the morning, 8 a.m. our time, London session, we already started to see good numbers coming in for the UK. They've had bad numbers, through the month of February going into March. And right now, we're seeing good numbers come out. If the economy has, good employment numbers coming in, it is signaling growth. This is showing buy side for pound. Now, remember that, just to give you perspective, we had good numbers for PPI, right? But let's keep going. On Thursday also, we had unemployment claims. Unemployment claims came in better than expected for the dollar. And this signals buy side. So you probably have, you probably start to think, okay, if this came in better than expected, why did we not see the dollar run higher? And I'll just give you simple reasons. But the first one is the important one. The first one is that unemployment claims coming better than expected doesn't mean that the dollar obviously will be bullish. You'd have probably heard this quote: buy the rumors, sell the news. One of the things that tells you is, if you look at unemployment claims and look at the dollar already has priced in the idea of bullishness. The dollar already has priced in the idea of bullishness based on the things happening in the Middle East. Yield is rising, inflation is rising. So what are we going to see? We're going to see, the dollar actually move higher. Now, when it comes to news releases, just to give you a little bit of hints, I'm going to do, a deeper study of fundamentals with the inner circle, because this is just, peripheral knowledge that you can apply now, but there's the how to actually understand it. And when we think about news release, we're actually thinking about the surprise factor. You would see that I think the last two NFPs we had, and even the last NFP, the last two ones, we had 130K jobs added when we were expecting 66. That is a big surprise. That would have effects on the market. All right. When we had the last one, we had minus 92K jobs. That would have a big impact on the market. Now, if we look at unemployment schemes, we did not really have a lot of difference. If you look at the numbers we're already expecting good jobs to come in. We're already expecting good jobs numbers to come in for unemployment claims. So yes, this data tells you, oh, the dollar could be bullish, but is that all? One, this is the data we're looking at. We'll go back to technical analysis to merge these things together. Unemployment claims, but you don't just want to think about all that is happening here. We want to see all the other things happening. There's something very important I want you to pay attention to. Maybe you have not been paying attention to it, but from now you start to pay attention to it. It is new home sales. Now, to just give you an idea of all of these things, when it comes to news release and how it affects the market, it's really the names, yes, matter, but the names is driving to one factor. Are the Feds likely to cut rates, or they are likely to keep rates or hold it? Are we about to have a dovish economy or a hawkish rate economy? That's what matters. So all of these news releases, growth signals that there is no need to cut rates. We can still have rates the way they are. But when we are having low growth, then it means we need to start to cut rates. Right? But that's how the other news releases work. If you look at new home sales is telling you what people are actually buying right now. And we're seeing that the numbers have dropped for the amount of people trying to get into buying a new house at the moment. And we can start to understand this based on what is happening, how inflation is going to make things get more expensive. And people are not just interested in spending money right now because of the things happening in terms of inflation. Fuel prices have doubled. The economy just becomes expensive when things start to affect oil. So this data that came in just an hour or so after this news release, right? I think an hour, 30 minutes after this news release, gave it off that, yes, all of this, normal. We're already expecting this. Unemployment schemes have been good for a while, and the market was already expecting that. But this is a signal. It's kind of like a new information all of the information on the dollar has been showing good, good, good. Philly manufacturing index, everything is coming out good, right? But is something changing? So sell the news was what was happening here. The news is saying, you know what? All of this might be looking good, but that's not all. And that's why I said the first information is you do not want to use just one thing to kind of grasp why price should be bullish or bearish. It's going to be a foolish thing to say, oh, unemployment claims came in better, and that's the only reason why I'm selling. It can be a confluence. Have you noticed that when you trade and you're going to have a system, your system is not just one thing. It's a confluence of things happening. There's time, there's execution, there's trade ideation, all of those things, trade management. It's all of those things that come together to give you the results that you want. It's the same thing here. Now, this doesn't mean that you're going to get it right. I didn't get it right on this day, but I'm allowing you to see how you can read this information. Now, this was for dollar. If we look at gold, we saw good numbers already in the morning. We saw good numbers and did I say gold? Pound, sorry. Pound, we saw good numbers with the employment claims that came in, right? That means we had more people, or we had less people claim, unemployment, sorry. Right. But something else happened, right? 7 a.m. EST, which is start of New York session, we had MPC official bank rate votes. Now, this is kind of like the rate values, right? The same thing that we're talking about, interest rate values for pound. This is it here. And how I want you to see this is saying, let me see if I can explain this better. I want you to look at this part first. The official bank rate. The official bank rate tells you what is happening. If we have lower numbers than expected, it means that, oh, we're more likely to see what a dovish economy. Dovish economy means rate cuts are coming. Rate cuts are coming means bearish GBP. If we have higher than expected numbers, it means that, oh, the Feds are willing to, hike rates, right? Or, they're not ready to cut rates right now. In pound, we're talking about pound now, right? So this is where you want to look at. Now, when it's like this, when we have equal numbers or nothing happening basically in terms of movements, it means that the rates are being held the way they are. So we are not cutting rates, we are not decreasing rates. And you might already start to understand that holding rates really still means, well, the rates are already expensive. So holding rates really means bullish still for pound. So we had 009. This number is the votes number, and there are two sides of the table basically, hawkish, dovish, right? And these two sides actually signals the 9 arms that actually gets into votes. Now I want to go into this deeper, but time will not permit it. But if you look at the numbers, you see 27 rounds up to 9, 45 rounds up to 9. There are 9 participants, there are 9 representatives that makes these votes. Are we going to be bullish? Are we going to cut rates? Are we just like this, like the Fed chair, how they make the debates on, oh, is it right to be cutting rates? There's going to be a vote. That's why they call it bank rate votes. So the votes right now are all siding that we hold rates. All 9 representatives are saying we are holding rates. The market was expecting that some say we hold rates, some say we cut rates. In an economy like this, the one that happened last week is uncertain. It means there's problem in the house, there's fire in the house, there's no even balance on if we want to hold rates or cut rates. And that's why you see GBP last month fall to the ground. So we were holding up rates here. The dollar was seeing this news release that wasn't so good, new home sales that really affects the dollar. And then we saw the market crash. Because if you look at it technically, it's kind of like, how do we have a Wednesday low of the week and a Thursday high of the week? It's weird. We had a Wednesday low of the week and Thursday doesn't continue. It's not something that happens a lot, but there's nothing that cannot happen in the Forex market. And that's why data is important. Now, you don't want to make sure that you don't want to make these data confuse you. You want to just understand them and know them and make decisions off of it. If we're not looking at the data and we go and look at price, we can clearly see that the way Thursday started, something was setting up. Again, like I said, you want to be able to pay attention to what data is saying. Look at price open, took out Asia's high, broke market structure, return back to breaker, broke market structure, return back to OB, broke market structure, return back to fair value gap, broke market structure. What in here signified that there was continuation for buys. If you are going to be buying on Thursday, right, you need to see what a breaking market structure to the upside. So when I took the trade, I was paying attention to, yes, technical analysis. On the fundamental side, I did not really pay, as much attention that I just showed you right now and there. But I wasn't taking a big loss here because it was a very simple trade. I saw this move down here as a breaking market structure, and I took the sales here. As price was rallying down here, I saw that there was still breaking market structure. You need to go into the Discord and see how I handled this day. Very pretty. I was proud of myself, even though I still took a loss. And I was able to adjust my stops to this high as price was returning back up here because price did not break market structure to the downside. So it was clear that something was happening. Even though I did not know what was happening, I didn't need to keep selling and selling and selling and just blow my account. It just took one sell to know, okay, what we are still having here is breaking market structure. So if you look at Thursday, we took out sell side liquidity Wednesday, just like how Tuesday played out. Took out buy side liquidity, broke market structure, sold off Wednesday, right? The same thing happened on Thursday. So as a day trader, you need to have your eyes on the ground and see what is really happening in price. Where are we having the breaking market structures to? Breaking market structures means institutional sponsorship. Runs higher, breaks market structure, returns back into breaker, expands. Again, OB here, break market structure, OB here, expands, breaks, fair value gap, expand, breaks, OB, expand, breaks, fair value gap, expands, bullish market structure. And it's based on the weakness of the dollar on this particular day and then strength in pound. We are not seeing interest rates cuts on pound. We're seeing good numbers in terms of their jobs markets. We're seeing growth signaling with pound, and we just see it expand to the buy side. So it's interesting, right? It's interesting. And I'll just round up by talking about the dollar. I know I've spent so much time talking about the fundamental part of things, but I wanted you to really understand. As I said, I would pick the news release one by one. I know I've talked about CPI, I've talked about NFP, and I'm going deeper into things like climate change, talking about new home sales, and all of these other news releases that actually make sense. I've told you, when you hear information like this from me, you already use ChatGPT. The free version is good enough. Ask these questions and confirm these things I'm saying, and you'd see, go back in price and confirm how price affected the data and how the data affected price, and you see stacked precision. It's crazy, honestly. Right. Okay, so let's look at this. Right. On Friday, we saw buy side. Friday was so interesting because it was Friday that I actually made money for the week. I was able to, bring my account up on Friday because all week I was not really available, and I took trades that were losses also, took some wins, partials that then covered for those trades, but it was still a break-even week until Friday. On Friday, I set this chart in. Again, if you remember what I started with, we had low, we had high. Wednesday, we were already thinking about buy side, which we were able to engage in. But on Thursday, we saw price return back into the discount part of the range. You will see this happen so many times. There is a range, price returns back into the range, expands higher, then comes back to take out the low inside of that range. It's called DOA, discount offset accumulation. Price will take out early buyers. Everyone that got in here wiped out, right? Only to be influenced into sell side, and then price returns back higher. You've gotten into trades like that. You go into the trade, price was buying, you were in it, right? You saw profits on, but before you knew what happened, it took you out. It took you out, and you saw that as a breaking market structure. You tried to sell, and then it expands all the way again higher. And it's the reason why I say the best bet for you as a trader is to be able to identify the range and buy at deep discounts. Not every single time will price rally, or that doesn't mean you can't get trades anywhere else. It's just a good bet for you. It's kind of like risk-free. I'm very close to understanding when this thing offs on me. So low to high, we came down to discount on Thursday. So we are not now bearish because we saw a full rush on Thursday. That's not how the market works. You read data again. So price return back into discount. This is now the OB. We've now rallied back into the midpoint of this order block. We've rallied back into the midpoint of this order block. And then we're inside of this breaker. So it makes sense for continuations of buy, which we saw, right? We saw a little bit of continuations on buy for Friday. We saw a little bit of continuations for buys on Friday. And the guys on the Discord were able to sell GU off of this news release. I sent out the chart, but I was engaging gold myself. Right, so breaking market structure, return back into, like I said, if we're going to be bullish, if this is a higher time frame level, midpoint of the OB, what do we want to see to confirm that price is bullish? Break. The break did not happen here. It happened here. Close above an old high, returns back into discounts, buys, breaks again, and then we ended the day like this. It was a Friday, so you're not expecting much. But if you look at GU with this information, you would see how GU was a much more interesting trade idea. So GU, we opened on today. And let me take out all of this. We opened on the day, rallied above Asia's high, then broke market structure. Very easy. Lower highs already forming, then breaking market structure. This is mitigation block. Up close, down close candle before they run higher. You can call it breaker also, that's fine. Breaking market structure, fair value gap inside of here, and this was the trade idea. Pretty trade, right? And GU was down for 50, 60 pips here. Let's see how many pips here. Oh shit, 105 pips. 105 pips. Amazing, amazing. So I'm sure you are able to get something out of this. That you don't just guess and say, oh, because of what happened yesterday, that's no, past profits doesn't guarantee future profits. No, that's not how it works. You come in and you make assessments and analysis on what is happening and you make decisions off of that. If you're going to be bullish off of this, what exactly is making you bullish? Right? And then we go to gold, right? And I'm not going to spend so much time here. We'll talk about gold more tomorrow morning. But I just want to give you a little bit of news release. If you think about gold, it's been sliding lower. And you should know that from up in here, I talked about how, we're going to see that gold would not just rally all the way higher as people think. And one of the reasons, again, is fundamental analysis. It's fundamental analysis. Fundamental analysis gives you a clearer picture. Now, gold is a safe haven and it's supposed to rally. But the problem with gold is gold doesn't rally when we have yield rallying. When we have the US yield rallying, gold suffers, it breaks down. Because the US yield rallying is telling us that the Feds are not likely to cut rates. So this is the safe haven here. This is where investments will be moved into, because yields are going up. See the yield as profits or as interest on investments being made. So if this is breaking down, then yes, investors will take their money and invest in risk assets like gold, like the stock market. But you see those things crumble now because the US yield is running higher. And we looked at this chart, we looked at US 2Y, right? And if you look at all of the US yields, you just see that, expansion. We looked at this, right? We looked at this and we talked about how we wanted to see those equal highs, which we have seen, again with a staggering expansion, take out price, take out those equal highs, and we're aiming again just up like that. So you can see that we talked about this when it was here, and we're looking at, these levels, and we're seeing those levels start. As long as inflation remains elevated, the Feds cannot cut rates. If they can't cut rates, then yield is going higher. Then the dollar would go higher. Gold will suffer in those conditions. The stock markets will suffer in those conditions. They will struggle to rally because they like the story of rate cuts. They like the story of inflation cooling, but that's not what we're seeing. We're seeing inflation extremely on the high side right now. Inflation is how much are the goods and services being priced. And you can tell right now that because of these issues that we're having with the Strait of Hormuz, with the oil thing, let's actually just look at some of the headlines that we have to just give you an understanding of these things. Because, sometimes I just talk about these things and I'm not really showing you some of the things happening here. Okay, this is not here. Monetary policies I was looking at for pound earlier. Right, but let's look at Safari. And yeah, latest news on oil escalation. So we can see Saudi warns Iran after oil attack escalation crisis 17 hours ago. Crude oil rises as critical gas infrastructure is hit 3 days ago. 4 hours ago, US Iran war. We can see that the Middle East conflict is still straining our operations. So there's no calm down yet. Even though we heard from Trump last week or weeks back that, oh, all of this is already drying up, the war is coming to an end. And obviously, why won't he say that midterm elections are coming in? So those things have to like, the war has to clear up. The Iranians know that, and they would not just give in to that. They would not just stop the war until who knows. So things are still escalated. As long as oil prices are still above $80 a barrel, then we still have issues with inflation. And inflation is up, the Fed cannot cut rates. In fact, data is already telling us that we're more likely to not see a rate cut this year again until 2027. And this news earlier this year, we at least we were expecting 2 rate cuts to happen this year. But there won't be rate cuts, or with prediction, it's likely that we don't have rate cuts until 2027. What does that tell the market? There is strength in the dollar, there's strength in the yield as a safe haven, right? And that strength would lead to, an asset class like gold or the precious metals, gold, silver, copper, all of that. We see them just, dive lower. I expect, right, just to give a little bit of outlook here, I'm looking at gold take out this low, right? I'll be watching that going into next week. Gold taking out this low, beautiful price action, gotten a sell on Friday. Also, let me show you that. There's a lot to talk about gold, but again, I said let's just keep it for tomorrow. Again, something that you should take away from this call is, if you think a high has formed, then a breaking market structure confirms it. Right? I was able to get in a buy somewhere here with one of the methods I used to trade, engulfing candle. I was able to get 50% of that trade out as it got to that high, and then lost that 50% as price took me out at these lows here. But again, the run below these lows was confirmation of a particular direction sell side. Breaking market structure, as you can see, price closes here, and I was able to get in the mitigation block inside of here. My stops was above that up close candle and allowed it to ride. Right, price returns, break market structure, returns back into the range, breaker, sells off. Right. I hope you guys learned something from this one. Again, the inner circle is going to be opened April 1st. And any other information that will be passed, I would send it. We have 8 p.m. today. We're going to be talking about real estate. We're going to be looking at what exactly do I invest my money in after I make all of this money? Like, how do I stay in the game long term, right? And just provide for myself and my family. That's exactly what we're here for. That's exactly what we're going to be bringing to the world. All right, guys, I would see you in the next one. I know this one was a long one, but again, I appreciate you for sticking around. Give me a thumbs up or comment on this video if you got through to this, right? Again, the Discord channel, the link to Discord channel will be in the description. And yeah, let's get on it. Bless up, family. Have a blessed week.